Chelsea did a good job of doing it, but she didn't say it out loud. She's nervous a little bit as y'all make this family planning decisions. You're so tight with money to a degree. If there's any relinquishing of the financial, that there's going to be some potential conflicts. Is that something that's kind of under the surface a little bit?
If I told you that you could save 10% less, how does that make you feel?
He literally just said, we need to be on a no-spend month. And I'm like, who's on a no-spend month?
I do want to make sure I build this bridge back, because money has been the bridge that brought y'all together, but I also see that it potentially could be a strife point for you guys.
Is it that you have not yet found the thing that you like spending money on?
That's kind of deep.
We're planning a wedding now.
Planning. It must mean you guys are engaged or
Yes.
not engaged
We
yet?
are.
We're engaged.
Oh, wonderful. Congratulations,
Thank
right?
you.
That's pretty exciting, yeah?
Yes,
Very
we're
awesome.
very excited, and we just booked our venue. So we're gonna get married in Knoxville, Tennessee. I was like, okay, I know the house buying rule, I know the car buying rule. Is there a wedding rule?
What's the wedding
What
rule?
is the wedding
That's we get asked that one all the time, and that's one of those things where personal finance is incredibly personal. And you know what? But if that's something you guys want to talk about, we'll dive into that. Because what you did that was awesome is you sent us sort of, hey, here's where we are right now. And you guys said at 30 years old, you are engaged, about to get married, about to figure out what that looks like. And so you kind of sent us some net worth statements for each of you. And it is wild to see that right now at age 30, Chelsea, you have a net worth of $125,000, making almost $200,000 a year in income. And then Lucas, you have a total net worth of almost $420,000, making $215,000 a year. So for two 30-year-olds,
That's
you
incredible.
guys are crushing it.
But I think this is so unfair in some ways, is because you look at this and it doesn't show the journey of where y'all came from. I mean, because there's a lot of meat when we were reading the notes. I'd love to know a little bit more about that too. Is this where you guys started from?
Is this how it was on day one?
Not quite, no. It's changed a lot, I think, in the last few years too. The number, you look at the number and it I don't know, it doesn't.
Y'all are way ahead of the curve.
What were you about to say? What were you going to say? It doesn't.
It doesn't register quite
Holy cow, I'm worth almost $500,000, right?
Yeah, it just doesn't feel any different.
People are going to watch this, and I think it's good for aspirational purposes too. I mean, I'll put Chelsea on the spot first. Mm-hmm. I mean, I don't see a lot of debt there. I see some student loans. I see a 401k loan that we're going to completely pick on you about. But that number, based upon your income, having $18,000 debt doesn't seem crazy. But is that where your debt journey started?
No, it was way more than that, 10x that. When I met Lucas, I was actually just kind of waking up to how bad my financial situation was. So I had about 6 figures worth of bad debt. So I had about
credit card or consumer debt? Both.
So it was credit card, which was about almost $100,000 worth of credit card debt. And then I had a car loan so at the time it was I was leasing a Wrangler, and then I ended up buying it out as lease so that I could sell it, which ended up working out. But my credit was so bad, so I had a 12% loan on the car. Yeah, I had a bad car loan. So I think right when I met Lucas, I think that I had a negative $100,000 net worth.
And how old were you when you said you woke up to, oh man, this is a bad situation?
I was about 27.
27. So it's not like you were.
You've made a lot of progress.
Yeah.
Yes.
Holy cow. Because I think a lot of people are in that situation. They don't start. I'd be curious to know how. Did you know a lot about finance? Did you grow up learning about finance? Did you know that it's bad to have $100,000 of credit card debt, or did you kind of have to learn that the hard way?
I had to learn it the hard way. I mean, so growing up, talking about money was very taboo, even within my parents' relationship. So, there was no talking about money, but there was always stress about money. Because, I think looking back, I think that, because to be honest, and y'all know Marietta well, I grew up thinking I was rich, and we were far from that. It was the opposite of that. The way that I learned about money growing up was completely opposite of how I steward my money now. So, to be honest, it was just, spend. That was growing up, that's how it was in my household.
Yeah.
Like you spend as soon as you get it, because you never know, if you'll have a chance to spend again or have a chance to get this again. So it was very like our household was very consumer minded.
And so when you graduated and started your career, did you just carry that? I mean, because I imagine you don't rack up $100,000 of credit card debt overnight. It takes a little bit of time probably to do that, yeah?
And with the interest rate, it balloons, as y'all know. So I didn't even know I had spent that. I don't even think I spent that much. It just the interest, right? Like balloons. But yeah, I guess after college, I started working at the company I'm working at now. And I lived at home for the first 4 years. So I felt like a little kid with a big girl job. So I was traveling for work, just having fun. I was making good money. And I was just not really that responsible. I will say though that my dad was like, make sure you contribute to a 401k. So I feel like that was my like saving grace with all of the mess I ended up in. But yeah, and looking back on it again, living at home, I would have been maxing it out because I could have, but I just like did the match, which was still 6%. So yeah, by the time I woke up, it was because I think my minimum debt payments were getting like almost like just as big as my paychecks. So
Gracious.
I'm like, oh, we're getting to a point, and I had moved out at that point. So I finally grew up and I started like, paying bills and paying, my rent and stuff. And so, yeah, I was like, if these payments are larger than my check, like how
That's
am I
not going to be good.
Right.
But you are highlighting, I think so many people in society base it off of what the monthly payments are. And it seems so benign and harmless. It's like, oh, if it's just like your car loan that you mentioned. If I can just afford the monthly payments, it will be okay. What they don't tell you is this stuff starts stacking. And then before you know it, it consumes you and you never build. You're so fortunate that you figured this out while you were young enough, and now you're on the other side of it. I even saw in the notes, the day you got it close to your net worth went to zero, felt like a transition point for you. I mean, can you describe that a little bit?
Yes. So, I mean, that day, it felt like freedom.
Yeah.
Because like, even though I was at zero, it was like, okay, I don't owe anything crazy. I'm not, spiraling to, bankruptcy or anything. I'm finally getting to the point where, okay, I'm out of the negative and now I can really build.
And you don't plan on ever going back to that?
Never.
Yeah.
I mean, it feels amazing. I mean, I think again, growing up, like money was seen as to buy things. But like now I feel like money is to like buy freedom.
I love
and
that.
options.
Oh,
I love that.
Yes. So I can never see myself going back to, being honestly like a prisoner, honestly.
I love that.
And doesn't it surprise you that you look around to your peers and it feels like in America, nobody like
Cares
feels
that
this
much.
pressure. And even though they're living, as your word, as prisoners to these debt overlords. I mean, and that's typically what happens.
I get in trouble. I mean, like once I was out of the matrix, I was trying to teach
Trying to tell everybody,
I was
right?
trying to tell
Yeah,
everybody.
it's hard because it feels like why does nobody get it?
Yeah. You've seen the light now. You've seen the other side.
And
Lucas, what about you? What was walk us through, okay, that was her, up until now. What was your up until now story?
Yeah, my experience with money was kind of the opposite. I have a hard time spending money, I would say.
That's weird. I don't know what that's like.
And where do you get that from?
I definitely get that from growing up. Like, I think there was some stress about money. Like, I didn't know, and like we didn't really talk about it much, but like I knew that there was some stress, and I grew up in a single parent household. My parents were both around, but like I knew that was a huge financial stress. My mom started working, at that point when it was
Because your
the four
mom
of
was
us.
a housewife.
Yeah, she didn't work when my parents were together, and then or part time, and then she started
She had to
working.
go back to work.
Yeah,
when
she
it-
started her
yeah.
career after 15 years
Wow.
of
With
taking
3
a break.
kids.
Yeah.
I always tell them, I'm like, your mom is like a superwoman. I mean, like
Yeah.
to have done what she did.
Although, we didn't it wasn't explicitly talked about much, but you can kind of sense things, and so like I just sort of picked up on, like buying things at garage sales, and not. I mean, I don't remember like sitting down at like dine-in restaurants, like so if we would eat at McDonald's back when McDonald's was cheap.
Yeah. So like a very frugal household is what it sounds like.
Yeah, I would say for sure.
And you've now carried that into adulthood, that now it's even hard for you to spend money now. Is that an accurate
He's
statement?
getting better, but yes.
Well, you're working on him, right?
Yes.
That's what you're working on.
It's a good
She's
balance.
chiseling away.
I already see the yin and yang of this thing. I can see how you, and especially now that you understand the journey, but I do think y'all will be incredibly good for each other because I hope by the end of this, we'll be able to convince you that you're so far ahead of the curve. It's okay to make sure, yes, I want your future self to be very happy with the decisions you're making, but I want you to look back, that future self or future version of yourself looking back going, man, I crushed my 30s, my 40s, these kids, this family we're building. It's all worthwhile because right now I can tell you're carrying some weight just from you don't like to spend money. Is that a true statement?
That's probably a true statement, yeah.
Because I even saw a note in there that said every $50, it feels like it's your last $50 to a degree. Is it something?
It's like I'll say that as a joke, but there's always some
little bit of truth
to it.
behind that
is that a
joke.
joke?
This has got to be like this is check the bank account before like sitting down to dinner, and it's like okay, I can afford this.
Does that create any strife or any conflict in the relationship, or are you just so thankful that y'all got out of this debt and other things? How does that play out currently?
Maybe we start to when we met because I think it will like kind of inform your question. So when I met him at a wedding, ironically, and
In Knoxville?
No,
just
in Michigan. At that point, I mean, I was like trying to trim my expenses. I was cutting back. Like I said, like I was really like just kind of waking up. I didn't know how to manage money. So when I met him, I'm like, hey, like as soon as, we started like talking on the phone and stuff after the wedding, I'm like, I'm broke. I can't focus on dating. Like I need to like get this like mess. And he's like, what mess? And I'm like, I have a lot of debt. And he's like, how much? And I was like, this amount. And he's like, ooh. He's like, ooh, that's a lot.
But I think her attitude about it was like I really noticed that. Like I thought it was really good to see. I think that was one of the things.
Like she was serious about it.
Yeah, one of the things that I liked the most about her when we met is she was like so focused on improving, specifically that. Like she changed her behavior on a dime. As soon as her friend showed her some Dave Ramsey videos, she's like, I can do this.
I love that.
I love Dave Ramsey.
I love that.
As you said, you used the Matrix term. So you took the pill where you now saw the game of consumption and what you would fall and prey to.
For sure. And like I feel like even that was the tip of the iceberg because I didn't realize that like y'all say like your money is your biggest like tool, So I was just at the tip of it. And so when I told him, he's like, well, and I think at the time he had like maybe a $100,000 net worth, which is still like a lot. Like, I'm like, whoa, how'd you say that?
I'm negative.
So together we're like zero. So I'm like, but I wasn't even looking at it like that even then. I think I was just like, I don't know what's going on, but I'm really trying to learn. I'm trying to get out of this. And he's like, well, I'm starting to also learn about like managing money too. So like I can help you like with learning. And that's when he showed me y'all's channel. He showed me Caleb Hammer.
I feel like we're part of this dating.
Y'all are.
That's really cool.
Yeah, y'all are. Which is like why we feel so grateful to even like be here today. Cause y'all been like such a great part of the story. I mean, again, I think prior to meeting him and prior to like waking up, to my finances, like I did have friends that knew about money, and knew how to manage it, and so they'd be like, "Oh, Chelsea, like let's talk about this." I'm like, "This is too we don't talk about money."
Right. Yeah,
it's because I knew I was being irresponsible. Like deep down, I think it's because I knew I was being irresponsible. But they're like, "Hey, this 401k, this is," and it was so technical. So when he showed me y'all's page, I'm like, y'all like literally say it in a way that I feel like anybody can understand. So that was also a big part. So. We met, we started dating. My lease was coming up and I was like, I'm going to move back home to like my mom or my dad so I can really like just crush this debt. And he's like, well, I just moved to Seattle for work. And I mean, I don't know anybody out here. So if you want to come live with me in Seattle and, we can tackle it together, you don't really have to pay rent. You can just focus on your debt. Then, then come out. And I'm like, I've never left Atlanta before. And Seattle's so far away. I think, again, we were trying to start and develop a relationship too. It didn't make sense to be long distance and then also be dealing with that. So moving to Seattle and, working on that together, again, I mean, it was all my checks just went to my dad. And then he was just mainly kind of paying the bills, and I would like support with like, some of the rent. And then I think it was like maybe $500 I would give him a month maybe, which was way doable, but it really helped me just like chow down like on my debt. So after living with him, I moved with him in March of 2023. And then by September or October, I was completely...
The credit card debt was gone.
The credit card debt was gone.
Wild.
So
Holy
what
cow.
I think is interesting, because you lived with your parents, but that's racking up this debt. So they weren't charging you a ton of rent, were they?
No, they weren't even, they didn't ask us for money.
It is a mindset thing shifted on you.
Yeah, well, so by the time I woke up, I was out and living in an apartment by myself. But when I racked it up, it was like right when COVID happened. And I was like spending like crazy. It was like kind of like doom spending, I would say.
Yeah.
And yeah, and then the next year, like it felt like it doubled the credit card debt. So I to that 401k loan.
We'll talk about that in a minute.
Oh, okay. Yeah. So I used that option and didn't use it correctly. But yeah, I would say around then, it really felt like it was only like a year and a half when my debt really ballooned from like maybe a couple thousand to that large amount.
And it just happened overnight.
Negative side of compounding
That's
interest.
right. Yes,
I mean,
that
instead of it ballooning for your benefit, it ballooned the opposite side.
Yes.
It went upside down for sure.
That's what makes her like understand the investing stuff so well.
Yes.
She's like, well, I've seen the numbers.
I want to be real on my side.
I want to be the bank instead of paying the bank.
Yes.
I love it. So you guys have been like working together for a number of years now. As you think about now getting married and joining finances and joining together and not just working towards one singular goal of you getting out of debt, but now working towards future goals, how have those conversations been? Like, how are you guys as a couple approaching moving into marriage? And then what changes? Like, what changes financially as you guys think through that?
I mean, I feel like the conversations are really just starting. Like, they're very focused on the wedding right now. And occasionally we'll talk about maybe buying a house, but then we'll say, well, I mean, we have we have the wedding coming up. I don't know.
Okay. But before that, we look at our finances frequently, both of us sitting down together. Yeah. Every month we track our net worth. We see it separately and then we see it combined. And I mean, we are, technically like completely split right now, but we're currently working through a prenup. And then we are also, when we get married, we are planning on combining pretty much everything.
Yeah.
Pretty much everything. So
it's not going to be your stuff and your stuff. It'll be y'all stuff working towards common goals, whatever those goals are.
And it feels like that's how we are thinking now. I mean, I do feel like it makes it easier and then also just more powerful. So
I think there's nothing wrong with, because that's why I'm glad y'all jumped right to it, was as you combine, how did you look at this, is that retirement accounts are already going to be kind of set up. I mean, they're going to be independent the way they are already, and having the prenup just to clarify those type of things. But then I would encourage, once the two become one, I love the thought of you guys having a joint account and, and really being in this thing together with, your monthly paychecks going in and working through that. I think that would be really powerful, because that's the other thing, is that the big thing about money, it is a powerful tool, but it is a tool that can turn into a power structure within a couple. And I always try to be very careful, because I don't know what decision you will make as you do your family planning, but you want to make sure money doesn't really jade conversations in the future on how you're going to raise the kids and so forth. And I've seen that with couples where, while y'all are both making great money, it probably doesn't seem like that big of a deal, but y'all are going to have to make big decisions with childcare and other things in the future, and you just don't want that being something that becomes a wedge that creates a bigger problem in the dynamic of you guys. Have y'all talked about that as well? I mean, I don't know when y'all, if we wanted to talk about it. It's crazy y'all haven't got married, but I know you at least have to be thinking about these things.
Yeah, I mean, we're definitely thinking about kids in the not very distant future, and just like how expensive that can be, but you don't know until you know. how much that costs. But I think like we've already seen how combining things would make things so much simpler. Just with the wedding stuff, it's like we're like, oh, I paid for this? Did you pay for that? Like, and we're trying to split the wedding stuff, but it's just a ton to keep track of. And there's everything's in like installments. We pay 25% now, and then a year out, and then
which. We are not financing the wedding, y'all.
I love it.
That was one of my questions, because when I hear 140 to 170 people, I know that's not going to be cheap. I'm sure y'all put together a budget on it. And I know when I looked at that net worth statement, I didn't see. That's the one thing I was a little concerned. Y'all aren't like rolling in cash. I mean, if y'all are pretty, and that's typical financial mutants. You feel like your money should be working. But I did start wondering, how are we going to pay for all this?
I love how you guys are thinking through things in steps. You're thinking through, okay, we got to get through this thing first and that thing first. And you said, hey, it's a lot easier. A lot of times if we have our finances on different pages, it feels like we're moving in different directions. If we can get on the same page, it's much easier to move in the same direction towards common goals. And so we thought, hey, why don't we do that for you guys? If we took your two individual net worth statements, what's it look like if we just put them together? Yep. Like as you guys are starting, what does that look like? So we went ahead and combined, and here you guys are out starting your marriage at a net worth of almost $550,000, which is just absolutely insane. And so as we think through this, I think it would be interesting for us to kind of just chat through your net worth statement. I mean, right now, we can see that between the two of you have about $41,000 in cash. Is the wedding fund, money for a wedding, is that outside of that, or is that inclusive of that $41,000?
We haven't really set aside a fund, so it's more like we're prepaying for things where we can.
Just cash flowing it out of paychecks is kind of how you're doing it. Awesome.
I'm thinking, we both have, I'm thinking I'll set some of the, the next time that I get stock that vests, I'll set some aside into like cash instead of, usually I take that money and move it over into investments, like VTI or something. But I'll set some aside in cash just so to have it in cash for that.
And that's the same thing for me. Like I just got like our ESPP. I just got like that money. So usually I also put it into my investments. But I have like earmarked some for the wedding. And then my next bonus, again, and mind you, like all of our investments are pretty automated. So it's like our paycheck, right? Like in paying for the wedding, it's like after everything that's left.
You've already done all your savings.
We've already saving.
Kind of freed yourself up for that. That's a beautiful thing.
Okay, so y'all are cash flowing the wedding, but it sounds like y'all it's not taken for granted, but your income is carrying a lot of the load for you because y'all both have great jobs, great cash flow, but your emergency reserves, are you telling me if we take 41,000 divided by 6, is y'all spending about $7,000 a month? What's
your burn rate on a monthly basis? Like you say, you look at your net worth every month. What do you guys spend in a month to kind of keep the household running?
It's probably about that, including everything, and that could be. If we needed to cut that back, we could cut that back by 1,000 probably.
Yeah,
maybe
like
more.
a couple of thousand. So we have been spending a decent amount like these last couple of months. So more than we typically do. But I would say based on y'all's rule about the 3-month versus 6-month, we fall more into that 3-month bucket, and so that number feels very comfortable for the 3 months.
I do think you're onto something with that, because when we tried to back into what y'all spend and save, it looked like we were coming up with a burn rate closer to $12,000 a month. But I think some of that might be y'all paying for deposits and other things. That's the cash flow of this wedding that you're talking about. That doesn't panic me to have 3 months, but it does concern me that you know how we talk about is goals will be funded. If it's within 12 months, if it's within 2 or 3 years, typically you want to have the cash. I just want to make sure y'all don't get caught, trying to cut into the emergency reserves to pay for the wedding, because some of these expenses are probably going to stack up all at once, right? Y'all have been able to spread it right now and control, but at some point, all the bills are going to come due at the same time.
Yeah, and it would be a little bit easier if like my pay came in a little more regularly.
Sure.
But,
RSUs make it kind of wonky.
Yeah,
right?
every 6 months it's like a chunk, and then I'll set some of that aside.
Okay.
And so even in terms of like how you guys think about budgeting, that's something you have to talk about. You see the income that you guys have, and it's huge. Right now it's like over $400,000 a year, but it's not just $400,000 a year divided by 12.
Right.
So there is a little bit of like creative budgeting you guys have to think about through that. But obviously you must have sort of mastered discipline, because here you are from 27 to 30, you pay off $100,000 of debt. And still, as you guys sit here, you have investable assets of over $500,000, $530,000. And it's great. It looks like you're both contributing to 401ks. Lucas, you have a rollover IRA that has about $36,000 in there. Chelsea, you have a Roth IRA that has about $14,000. Now, Lucas, yours is interesting. Your Roth IRA has about $80,000 in there. That's a pretty big number for a high income earner. How are you able to do that?
A lot of that came from a Roth 401k.
Okay.
So at my previous employer, I had some money in traditional, some money in Roth. And when I moved that over, the Roth went into an IRA.
Awesome.
That was when I learned about Roth IRAs.
Okay.
I only had the 401k until maybe 2022. So I've only contributed to that. I've done the backdoor Roth now 3 times.
Okay, so that's sort of an interesting thing. So since you have that rollover IRA balance, if you're doing a backdoor Roth, are you paying tax on that conversion every year?
No, that's why, and it may not be, I guess maybe it's not included, or that might be I have a separate traditional IRA with $0 in it.
So one of the things that's interesting is you want to just make sure you're not running afoul of this. Is if you're going to do an annual Roth conversion, you have to make sure you don't have any other pre-tax IRA balances. So like when I see that you have an IRA rollover of like $36,000, what that would tell me is, okay, if you were to do a backdoor Roth this year of $7,000, when you go to file your tax return, even if you make a $7,000 non-deductible traditional IRA contribution, the IRS is going to say, okay, you converted that $7,000 to Roth, but when it looks at your total IRA balance, it's going to add that $7,000 to the $36,000. So you're going to have like a $42,000. So there's going to be a prorated calculation where a big chunk of that $7,000 should be taxable. So that's one of the things. If I were you, I'd go look back and make sure, okay, was I filing those forms correctly? But it's not a super complicated thing to solve moving forward, because you are an active participant in a 401k plan, and it sounds like you have a pretty good 401k plan, right?
Yeah, they do for a while I was doing.
It's a Fortune 500 company. We're pretty familiar. It's a decent 401k.
Yeah.
You could roll that $36,000 into that 401k, and then that would allow you to now not run afoul of the backdoor Roth.
Okay, so there is a separate, maybe I didn't include it. There's a separate account.
It doesn't matter if it's separate. They look at all of your accounts. It doesn't matter if it's a separate traditional versus a separate rollover. They want you to take into account that you have pre-tax assets, and you're supposed to prorate how much was your contribution and how much was already pre-tax. And that's why it's a big, I have a neighbor. He watched it. He's now moved back to Chicago, but he wrote me, this is probably a year ago, and he's like, I saw that episode, I did the backdoor Roth, and I was like, wait a minute. Remember on all those conversations we had on the back porch, I said, you had that rollover IRA. I was like, you can't do backdoor Roth. And he's like, oh my gosh, I've screwed this up. And I was like, don't worry, you can fix this.
We can fix that.
Okay.
But this is something that I always remind people, and it's why it's a measure twice, cut once. When anybody does a backdoor Roth, make sure you've cleaned out. The only IRAs you can still have is like an inherited IRA. But if you have any rollover IRAs, SEP IRAs, it blows this whole thing up to a degree, but you can fix it.
So I just moved that into the 401k now.
That's one of the things you can say.
401k.
Yep. And then it's nice and easy and nice and clean. And the dead giveaway for us that was happening is when we look at Chelsea's traditional, seeing that $2 in there, I bet that's a conduit account. I bet we fund that and convert it. That's what we would expect to see for backdoor Roth contributors. So there's a great thing that you can clean up right there just to make sure you're not running afoul of anything.
Don't worry, we'll put that on the homework list.
And then you both are doing HSAs, it looks like, high deductible. Your participants in high deductible health plans, allowing you to do HSA contributions. And then both of you have really healthy taxable assets. I'm assuming that's because of either ESPP or because of incentives, but that's great. So when I look at this and I think about your 3 tax buckets, your tax deferred bucket in the 401ks, your tax free bucket in the Roths, and then your after tax in the taxable, again, you guys are crushing it. right? I mean, do you objectively know that for 30 years old, you're absolutely killing it?
Yeah, we've seen the videos where it's like you want to have
we see
one times your income at 30, and then whatever it is at 40 and 50. But
he's like, I'm not worried about 40. We just got to 30. Not worried about 40.
And I'll be honest, those rules are great, but they're benchmarks only in the fact that if y'all's expenses are significantly lower than your actual income, which y'all's is, it skews that. You guys, it's actually more conservative because you guys having a net worth at this age of as high as it is going to, the power of time. You've experienced compounding interest working against you. Now you're about to experience just the blessing of this thing building upon itself. It's going to be incredible.
Exciting. It's exciting.
Yeah, like Chelsea loves running the numbers on like just what this money will be when we retire, not even like the money that
it sounds like you go to moneyguy.com/resources and you play with our wealth multiplier. You drop it in to see what it can turn into.
All the time. I've gone on there. I've downloaded your deliverables. I'm a consultant. I love that term. So I download those. I send it to everybody. I send the links. I go through the financial order operations when someone finally gives me the time of day to tell them about this stuff.
I love it.
Like Lucas just mentioned, me running the numbers. Like it is when he feels really anxious about money. I'm like, if we didn't even spend another dollar on our retirement, on our, anything or any of our investments, like by the time we're 65 or 50, this is what it would look like, with that like 7-8% annual return. So
the number gets pretty big, even without having to save a whole lot more, because it's a testament to the hard work that you guys have done. And we want to talk a little bit more about that, because one of the things that's going to do is give you guys some freedom around the choices that you make. But before we can talk about that, we talked about the asset side of the network. So now we got to talk about the debt side. Both of you still have some student loans, but it sounds like those student loans are pretty low interest. Is that an accurate assessment?
Yeah.
They're not super high interest, and you guys understand that your dollars can be more powerful working for you. So you're just not in it's not like credit cards, it's not like consumer debt. It's okay for those to sit out there. But then I see this other guy. I see this third one right there, Chelsea, that says 401k loan. And it sounds like I'm using my contest.
It's not even that big. It's basically an insult every time. I have to think when you look at your statement and you see that 401k loan, it's just like, hey, I'm a reminder of the mistakes of the past.
Oh, yeah. And yes. So there is a whole story around that. And then I do have a positive update about it. But yeah, when I look at my statement, I'm like, this is just so annoying. Give us some of the
story. You can give us the Cliff Notes version.
Right around the time I started waking up to my situation, my financial situation, how much trouble I was in, I was like, oh my gosh, what am I going to do? It's, my credit card debt's getting big. And so someone was like, you could take out, your 401k, you could take money out. And I was like, okay. So I go on the website, on our employer, website for our 401ks. And I'm looking at the different options, an actual withdrawal or taking a loan against it. So I was like, okay, the loan against it seems decent. And they don't let you take out the whole thing. It's only half. So I was like, okay, I guess I'll take
half.
Oh yeah. So I took out, I was like, okay, I'll do that. So it was about at that point, it was a $10K loan against my 401k. And it was, the interest rate was 3% something, 3% something. It was back when interest rates were really low. I was like, I'm going to use this money to pay off some of my debt. I literally went and spent it on a purse. The whole thing.
All the positive things that have happened, and then you go and blow it on a purse.
So this was before all
this
of
was early on.
This is
early
before
on.
This was a different person.
This was part of the problem. This was part of the man.
Yes. So and yeah,
what purse was it? I have to know now.
Oh, I'm embarrassed. I don't even looking at it. I've been trying to
hear the brand. Come on, Chelsea, give me the brand. What was it?
Louis Vuitton.
I knew it. I pretty much could set. I knew what it was going to be.
Yes, I won't even touch that thing with a 10-foot.
Do you still have it? Is it as a reminder?
Oh, yeah.
That is actually. She thought about selling it, and then she was like, I need to see this every day.
I love it.
Keep me on the straight and narrow. I barely wear it. I don't wear it really. I literally been trying to give it away, which I probably shouldn't do that. If I just hold on to it, maybe.
I would not give it away.
Right,
I would
have let it be kind of a memento of mistakes that have turned positive.
Yes.
I mean, it's essentially that Phoenix experience of it. This thing was bought with the wrong intention and at the wrong time, but you overcome it, and it actually can have a positive
for sure
angle to it.
For sure. And when I was introduced to your channel and like your financial order operations, and then seeing like the 3%, I was like, okay, maybe I just like drag my feet paying off the 401k loan. But then I was like, I don't know, it just annoys me every time I see my paycheck. So I did pay off the 401k loan.
Awesome.
Nice.
2 weeks ago.
I can mark that through my homework.
Because that was going to be on the homework list.
Yes.
Like, let's just get rid of this thing that is just sitting there reminding you of those bad decisions.
Because there's no point in that. You guys have such a healthy net worth. There's no point in that being on there, which is awesome.
When this slide came up, I was like, "Oh, I forgot about that." And that was only 2 weeks ago. But yeah, so it's paid off. The Louis Vuitton's paid off. The loan's paid off. So it feels nice. And then now my 401k balance has that amount.
And by the way, the reason I wanted you to say the name is because there is going to be somebody who watches this.
And
is going to have done the exact same thing, because this consumer world we live in, where they're constantly just inundating us. They put attractive people on there. This is what people who are successful and young are doing. And that's just the opposite. Yes, you can have nice things, but there's a time and a place. It's not at the beginning. It's after you've built up enough assets that are working, but that's not what society tells you in this consumption world we live in.
For sure. And back during all of this, I was living in Atlanta. I love Atlanta. We're trying to move back, but y'all know Atlanta, everybody wears their money, drives their money,
it's a very
lives in their money. It's so flashy. So moving
from
to
Wisconsin is very different, because you don't drive a car like that because it's gonna get covered in salt.
Right? Yeah, you just know better.
It's gonna rust on the bottom. So you go to Atlanta, I'm like, wow, everyone. I've
400 has that.
I think half the videos you see on TikTok where they walk through car dealerships and everybody's telling you about their $1,200 and $1,400 car payments, typically are. A lot of them are. I've seen them in Atlanta and other places, and you're just like, oh no, this is the world we live in. Everybody bases it off of your monthly payments instead of 23.8. But I would love to talk about, because that's a great segue. Y'all want to move to Atlanta, so are we thinking about renting? Are we thinking about buying? What's the plan there?
We are we've looked at houses to buy. We would probably rent initially for a while.
Yeah.
We're just very comfortable renting right now. It just seems like I know they talk about like the 5% rule of renting versus buying, as opposed to like what's cheaper. I think the flexibility is definitely super nice. It feels cheaper to rent right now.
We're very career focused, and so if there's a job opportunity that we could pick up and just run to, we do it.
And if you own a home, it makes it a lot harder to make those kind of changes and those kind of adjustments.
We've seen, we have friends, again, being in tech and being in our industries, we have seen people, when COVID happened, they moved to a certain place, bought a home, and now they're it's like a fire sale for all these homes.
Companies are asking people back in the office.
Yeah, so they're trying to get out from underneath the home ASAP. And, it just...
It doesn't always happen that easily on a home.
Yeah. And even people that didn't move away, I know people drive in 2-3 hours to work because they were working from home for 2 years. And now
they have to go back.
Yeah.
And it's a problem.
Yeah. And being in Seattle, that is where they're one of the cities that they're calling all these people back from Boulder, Colorado, Austin, Texas, Charlotte, where everybody went to during, the pandemic.
And even if you were driving to the office, there wasn't any traffic for 2 years. It's
a whole different thing now. So, so you guys think, okay, we potentially want to move, but we're okay renting. We don't have to buy a house immediately. What are some of the other goals that you guys have? Again, you've got this short-term goal of wedding. Once you get past the wedding, as you guys think about building and growing, what are the things that you want your money? What are the things you want your money to allow you to do?
We definitely know that we want to start early saving for college. When we have kids.
Okay, there we go. You got to have the kid. You got to have the kid. All right. It's so funny. People always say we want to start saving for college before we even talk about having the kid, right? We have people on here all the time that already have a 529 before they're even. And we got to have.
We talked about doing that first.
Yeah,
we talked about opening a 529
he stopped me.
before having a kid.
He's like, what? He's like, the kid doesn't even exist yet. But I think some of my longer term goals that Lucas and I have, we're okay. And I would say that has been it hasn't been like a point of conflict, but just like making sure that like I'm aware of what his goals are, he's aware of what my goals are, how are like how are they our goals? That has been kind of interesting because it feels like a moving target sometimes, especially when you think about like him being so frugal and then, me being a bit more like, the money buys us options. So like the big thing for me is having the option to have as many children as we want, having the option to, be able to pay for their, education and having the option to help with a down payment, having those type of options. Also like with our own self, right? Like having the option to stop working at our jobs and possibly do something else. I love Fine. I've been telling everybody about Fine.
I love it.
At work.
Next endeavor.
Yeah. Next endeavor. Yeah. So like that, I would say like long term, I think just in general, that freedom is our goal to really do what we want to do.
I feel like being work optional with, kids, especially as they get a little bit older, I think having time, being able to maybe work part-time or work part of the year, like in our 40s and 50s, I think would be really nice. Or she said like, or then start doing things that are more interesting to us.
Okay, so you said on this one hand, you're like super career motivated, right? And if a great opportunity presents itself, you want to go that way. And then you're also talking about, though, being like work optional or maybe doing something different. But you said like in your 40s and 50s. So this is not something like, hey, we want to start a family and be work optional. We're going to both be career motivated even as we have the family and that sort of. Walk us through how have those conversations gone?
Yeah, I like it. It feels like there will be a transition period, but that's a little muddy thinking about that because
messy middle.
But I need details because y'all have gone so. Bo just did a good job of explaining. Y'all have given us such far spectrums there: career, and then you got family. How big of a family?
We're both come from like 3 kids. We're both middle kids. So like 3 is a number we keep coming back to.
Kids?
We're both middle children.
Sort of buried that lead at the very beginning too. How wonderful that you guys found each other.
Yeah. We get each other for sure. For sure. Like 3 or 4. It's hard to say because we haven't had one yet. So,
Yeah, I keep saying like, I feel like when we have 2 kids, we'll decide if we want a third. Like saying a number right now just feels like saying a number.
Yeah.
And then I want to put you on the spot, Lucas, because Chelsea did a good job of doing it, but she didn't say it out loud. And I want to say out loud what I think I heard her. She's nervous a little bit as y'all make this family planning decisions. You're so tight with money to a degree that if there's any relinquishing of the financial, that there's going to be some potential conflicts. And is that something that's kind of under the surface a little bit?
Yeah, because even now, right, like I feel like there's things. So for example, like going with me on a work trip, like I'm like, hey, like it's in New Orleans, so you need some like clothes that are like light, really airy. It's super hot right now. And we get there and he's like having all this anxiety about a shirt he can clearly afford. Right. And I'm like, all right, I'm not doing this today.
I'm on the Target app while we're walking around the mall.
He actually ordered it from Target.
I found some nice ones.
But I'm nervous that when the time comes and we have to pull back on how aggressive. Our savings rate is super aggressive, and we have to pull back on it because we have children or we have these other priorities. I feel like he's going to not be like, I think it's going to stress him a lot. And
it probably will be something that I have to, work through. But I do think part of the reason we're so aggressive now is because it's going to be harder to save. The next 10 years are probably going to be harder to keep the savings rate we currently have.
Yeah.
Well, let's look at your savings rate. Because again, you guys are so kind in terms of like sending us this. When we look at how you guys are saving, you presently have a savings rate over 35%. Now, because you're high income, this doesn't even include your employer matches. So when you factor in the employer matches, you've got like 40% of your compensation going towards your future well-being. You're doing 401k contributions, you're doing Roth IRA contributions, HSA contributions. You're doing the ESPP, Chelsea, Lucas. You're saving all of your net RSU. Outside the wedding, you're just banking all that money. So when we look at this, the amount you guys are saving is remarkable, and it's incredible. It's the thing that's allowed you to have this huge head start that you have. But you've heard us say, one of the things that we shoot for is when people ask us, hey, how much should you be saving? We say 25%. And here you guys are at 35%. If I told you that you could save 10% less, Lucas, how's that make you feel? Like when I say that out loud, what's the immediate emotion that comes your way?
I felt his heart drop.
I don't know if it's necessarily anxiety. It's sort of like, what would I spend that on? But a little bit of it's
like where is it going?
Like if I wasn't investing.
Is it that you have not yet found the thing that you like spending money on?
That's kind of deep.
It's probably that a little bit, yeah.
Because it's one of those things, like I get going to New Orleans, wanting the light, airy shirt. If you don't place a lot of value on clothing, I get why that'd be a thing.
But it's a functional thing.
That's what
here's where I'm going with that. What happens is you guys start thinking about a family and having kids. Let me go and tell you, you're going to love spending money on those kids, right? Do you think that once it's that sort of thing, once it's those sort of life decisions and you begin to maybe out of necessity back down that savings rate, does that something that you think you're going to have more comfort with, or do you still think that's really going to create some tension for you?
I think I'll have more comfort with that than spending on things like clothes, for sure. We have a couple of cats, and I will spend money on stuff for them. So it probably extends.
Probably,
yeah.
Yeah.
But part of it is because such a big chunk of that savings rate is the RSUs. Mm-hmm. What feels a little unnatural is like selling some of that and taking it out. Because I could, if it was like a deduction from my paycheck, I would be like, okay, I can reduce that a little bit. So just sort of logistically, it's like actually selling the stock and keeping the cash feels like a decision.
Right now with your RSUs, are you just allowing those to vest and you're holding on to the company stock, or didn't you say you're selling?
I do sell it and put it into index funds.
Got it.
But cashing it out feels like, I don't know, like I'm just like, I don't cash it out. I keep,
it's
I
in
put
an
it
investment,
away.
right?
It keeps getting diversified in the index funds.
It's an investment.
Yeah.
There's something, we've been doing this Making a Millionaire for a while now, and it was something that I see with a lot of our guests is what happened in your household growing up has a long tail to it. Mm-hmm. And it's even to the point that, we've had super successful families who are actually at that threshold of retirement, but the father would say something like, you'll never amount to, or, the system's rigged against you and all these things. And it breaks my heart to see very successful people never get out from the shadow of that. And I worry, and that's why I love that y'all are here, because you can talk about this now, is so that when y'all have the growing family, you don't keep pushing this forward to where this legacy builds, and you don't see the blessing of what money is nothing but a tool. Mm-hmm. And I wish you could sit in my seat because I was very much what I consider a tightwad for decades of my life. And a lot of it has turned out to be great because I have all this additional flexibility. But at some point I had to give the tightwad card up because I realized you can't take it with you. This money is only a tool, nothing more, and you will need to get sentimental about building the memories and the blossoming and doing stuff as best as you can. The thing I worry, and this is why we tell everybody the 25%. Y'all are so ahead of the curve. If you did the 25%, you could just spend the rest with really reckless abandon
on whatever,
and it wouldn't matter because, and I know, and that probably seems crazy because you're thinking about the financial independence, next endeavor, and all these other things. But at some point, I'd tell you, while you're dealing with anxiety about spending, it's okay to kind of address it and try to get on the front end. And I think a good way, y'all need to talk about this, is you're also thinking about all these life changes. I would never want one of you to make a decision, because if y'all start having 3 kids, 4 kids, like y'all are talking about, you're going to find that messy middle creates some weird pulls and pushes on your careers.
It's kind of messy, if you will.
And y'all going to have some heavy conversations about what do we change on our work-life balance so that we can actually have these 3 or 4 kids. And what I don't want is money to create this weird power structure to where y'all can't make the best decisions for your family.
Yeah. One thing Chelsea has kind of been pushing on me that is sinking in slowly, even if she thinks it's not sinking in, it is sinking in, which is like, she'll say, because we'll be talking about things that we spend money on, and she's like, I've hit my savings goal for the month. The rest of this money is
to do what I want
That's
to do.
pay yourself first.
You
have paid yourself first.
That is because part of it is like when I spend money, it feels like I'm taking money out of.
You're not,
but it's
though.
like this is like, and that's what like having the savings goal, because I probably didn't know it was 35%, even though it says in our spreadsheet. But
it's that, yeah. I mean, he literally is like, Chelsea, we need to be on it. He literally just said, we need to be on a no spend month. And I'm like, who's on a no spend month? I'm like, you can put yourself on a no.
I just put a couple of deposits down on things for the wedding, and I don't know, I was feeling like things were starting to add up.
He feels like the walls are closing. Like I don't know.
But I calmed down from that. That was after that trip to the mall.
You just said that today.
That was after. Well, I was joking about having said that earlier. But like that was after that trip to the mall where we were shopping for clothes, and I was like,
work.
Yeah.
Where I make money.
They're paying her to go there. Sometimes I just need to, like, the moment passes, I calm down a little bit, and I'm like, she was right.
My wife and I, when we first got married, we had a struggle very similar to this. There were things that she derived value in and got value out of that I could not understand. I make a joke on the show all the time about this, right? I, at that stage in my life, was buying $7 Suave shampoo, and that's what I wash my hair. My wife does not use.
I think it was $2.
Yeah, maybe it was $2. She did not use that, and when we got married, I'd see these charges, and I'd be like, "Hey, this is irresponsible, and this is grotesque, and why are we doing?" And it created a lot of friction because I didn't understand that was something she valued. And what I recognized at that time is that it was okay for us to spend that money because we were doing the saving. We were funding the 401ks. We were saving in the Roth. We had the emergency fund. We were following the financial order of operations. None of that consumption was bad consumption. It was just different consumption than what I was used to. And there was a conversation around that. Now, she also had to come on board with, hey, here are the goals that we have. We want to be able to retire, and we want to be financially independent. In order to do that, even starting now, we have to max out our Roth IRAs, and we have to do this. So we do have to pay our. And so what we both had to do was sit down and have a very candid conversation, because I just wanted her to be me, and she just wanted me to be her. And what we had to recognize is that when we got married, we had to come to the middle and actually compromise. You said something so beautiful a second ago. We just haven't really defined what our goals are. Talking to each of you individually, it sounds pretty clear. Like, I kind of have a vibe for what your goals are and what makes you feel comfortable. And same for you. As you guys get married, then you have to decide, okay, well, what is it for us? What are the things that we're okay not being as stringent on, and what are the things we're okay loosening up on, and what are the things that's some like real, and it doesn't have to be hard stuff, but it's some like very important conversation, because in my experience, if you don't address that on the front end, what ends up happening is that voice in your head starts playing really mean tricks on you. This is something Brian taught me. It starts, you build resentment, and you start creating a narrative in your head that does not exist. So if you can talk about it on the front end and get on the same page, holy cow, does it make the journey so much better. And it makes it so much easier. So take that from us who like screwed this up early on in our marriage to figure out, okay, how can we have that conversation around, if we spend the RSUs, it's not stealing money.
Yeah.
But also, just because we have extra money doesn't mean we have to spend extra money if it's not something that actually generates value for us.
And I think what helps me sometimes too is just knowing what like Chelsea has gotten through for the past few years makes me confident that like if we needed to buckle down, if one of us lost our jobs, like
certainly seems like you have the capacity.
Have discipline coming out of your ears. I mean, without a doubt, for sure.
Yeah, we can go to rice and beans.
We can eat rice and beans for a little while if one of us lost our job.
But if you had to.
Yeah.
If we had to.
You don't have to go to rice and beans. And that's the conversation y'all need to have around what are the things we have to do and what are the things we get to choose to do because of the hard work we've done up to this point. Y'all are in a great spot.
Earlier when I talked about pulling out the calculator, maybe I don't explain it that well, but that's really my thinking, right? I'm like, this is why we're doing this, so that we can do what we want to do. Mm-hmm. If I want to go and get some nice work clothes for work in the New Orleans heat in the summer, I can without breaking a sweat or without Lucas freaking out about it, And So I feel like that's something that he has gotten better, definitely gotten much better about. But it's still those like things that come up. And so if we're getting married, right, we're combining like our bank accounts, we're combining things. So when you see, me spending or you see certain things being spent, I'm nervous that is going to, cause some heartburn for you. Because right now, again, we operate like a team, and we still see there's a lot of transparency around our finances, but he's not feeling it when I'm spending, right? Because we're not joint. But when we're joint, you're like, okay, Chelsea did this, but I'm just nervous that he's gonna come to me about it. I'm gonna have a hard day at work, and he's gonna mention it. I'm just gonna snap, and I don't want to do that.
Well, I think it's wise that you recognize that early on that could be some friction. Have you guys sat down and done a budget together? Like an actual, here's the money coming in, and here's categorically where it's going to go out.
It's sort of retroactive.
Yeah.
So you've done a lot of tracking.
Yes.
One of the things that I found in my experience can really help is if you can build a budget together. And that budget might look like, okay, here's what we're going to pay for rent. And this is going to be our Roth contribution. This is going to be this, and this is going to be this. And then there's going to be like hey, this is Chelsea's miscellaneous budget. It's not separate money, but hey, she's going to spend this much on whatever the thing is. And hey, here's Lucas's miscellaneous budget. And he's going to spend on whatever it is. And what you know is that so long as you stay inside, whatever that number is, it could be $2,000, whatever it is, you guys have some comfort that, okay, hey, this is part of the plan. It may not be something I'm comfortable with, but it's part of the plan. Or if you get to the point where it's like, hey, okay, I bought all the clothes this month, but I really wanted to do this other thing, but it's not in the budget, you can have the conversation, hey, I'm going to honor what we agreed on the front end. Tracking is fantastic, but all it does is tell you where your money did go. If you can, and it seems crazy to tell a couple who makes $400,000 a year that maybe you should budget, but I think it'd be helpful behaviorally for you guys to define where those parameters are so that you both can have
kind of like permission.
Exactly.
That's exactly what it is.
Exactly, because for most people, budgeting is the restrictive side of it because you're trying to create money for savings. You need the budget so that you see the compartmentalization of now I can get permission to go do this without feeling stressed out about it.
Yeah, I think figuring out how to handle the chunk income too would make me feel more comfortable because sometimes I feel like I'm just holding, like, okay, I need to sort of hold over until the next stock comes in. And if it was coming in, every month, it would be a lot easier to be like, okay, it's okay to spend this much of it. But because if it's like, if nothing vests for 4 months and it's part of my income to spend that, I would have to go sell some index funds and then transfer the cash, which feels different than like, okay, if I get a payment, I can take some of it as cash, and then that's cash that I can spend, and the rest of it is invested.
One of the ways that we've seen our clients, because we've had to help a lot of clients navigate this, because a lot of our folks are executives or they get paid, incentive compensation, and it's chunky. Every 6 months you get a big chunk that makes your income look a lot higher than it feels on a month-to-month basis. If you guys, again, if you can do that exercise of budgeting and you can figure out how to budget off of the base, right? Because you guys still have a healthy base. It's not like it's 50% of your compensation. If you can budget off of the base, what you allow yourself to do is then when those incentives come in or when that bonus comes in, you say, okay, here's what I'm going to do. I know what it's going to be, and I'm going to do I'm making up a number. I'm going to do a 60-40. 60% of that is immediately going to go straight to savings, straight to whatever. But that 40%, that now becomes discretionary cash flow. We get to figure out what we want to do with that. So is there the upgrade we wanted to do, or is there a trip we wanted to take, or is there, it's not like it all has to be saved. Because what you're going to do is, again, when we've seen people do this well, you build your annual budget. Hey, this is what we want to happen this year. Yeah. And then you get down to your monthly budget. Based on our base, this is the monthly. And when these twice a year chunks come in, all right, we're going to 60-40 those. We're going to 50-50. Again, you're just giving yourself permission so that way you're not held captive, held ransom by the cash flow.
Yeah, because once it's invested, it feels like it's not there anymore. Like it's in a 401k or it's like it's locked up, but it's in a taxable, so that's not necessarily true.
I do want to make sure I build this bridge back because money has been the bridge that brought y'all together, but I also see that it potentially could be a strife point for you guys. I don't want y'all leaving the show being like, oh my gosh, that brought up some things that we haven't really worked through. I do think, Chelsea, that if you look at how Lucas has been with your debt journey, there's a generous guy here. I mean, without a doubt he is, but this is something, and you probably even can recognize we're going to have to build some tools and some dynamic things so that you feel comfortable. Because but I think it's just so important for y'all to tackle before you get married, because I don't want the compromise to be because y'all realize this is a battle and it's okay because y'all both make great money right now. Well, we'll just come in the marriage and just treat everything separate, because that way it takes the stress off of Lucas. I could see that. That's why it's important to address this now so that it takes the power out of the money. Because that's what y'all got, some really cool life goals, and I just don't want that dynamic to blow anything up for y'all.
Yeah, well, I feel like this conversation has answered a lot of my questions for sure.
Look, I work with a lot of couples, and sometimes when I see the separate accounts, I see very successful couples that are both doing well, but you do see some elements of mine. That's always, it makes me cringe a little bit, because my wife is brilliant, and she made more money than me when I started the company, but then we made the decision as a couple that she was going to stay home. We had a ground rule that I was never, ever, ever to talk about who made the money. And I've honored that, because I know if I ever mention that, it just will create some insecurities and other things that's just very unhealthy. But that's why it's a measure twice on all these dynamics with a couple, is because some of these decisions y'all will have to make with a family you can't get back. I mean, because once and you even heard Chelsea talk about how your mom's a super mom, because here she was, your parents got divorced with 3 kids and she was stay at home. That is a hard pill to swallow, and that's why I'd love for y'all to figure it out while you're in these great rosy situations, so nobody gets left with these weird under the surface things that boil up to the top and ruin things.
We definitely have been thinking about it as ours for some time, and the way that we, like, also just the advice that we see is like combine stuff, like really combine stuff. We know people who do, and we know people who don't, and it seems better, but for ways that it's hard to know until you've see the problems
and experienced it. Yeah. We said we answered a lot of your questions. Were there any questions we didn't answer? Anything you were curious about that you want us to weigh in that might be valuable before I load you guys up with your homework?
I mean, probably we didn't talk wedding budget really.
Okay, well, how about this? You say what you're thinking, and we'll make a facial expression immediately and viscerally that if it seems reasonable or it's insane.
Okay. I mean, so we sort of have like what it's almost certainly going to at least cost, and then we have what, like, the
Hard
top
stop.
level.
Hard stop.
What's the at least cost?
The at least cost is like $45,000.
Okay.
And then how much have y'all already paid in deposits and stuff? What's the residual that's left? And by the way, is that a realistic number? It seems low.
It's probably
Well,
low.
in Knoxville.
In Knoxville, it's a little cheaper.
Because let me give you guys some credit for some things you've done. You know you want to have, and it's not a huge wedding, but a larger wedding, 175-person guest list. And you've already defined, hey, we want to have this many people. We are not going to go into debt. Like, so whatever this is, we're going to cash flow. That naturally has allowed you to keep some parameters and some reins on this thing. Because that's where then you get to money is nothing more than a tool that allows you to do the things you want to do. And if one of the goals is you guys want to have an amazing wedding, and you want to have it at a great venue, and you want to have amazing music, and you want to have delicious food and awesome cake and the drink, it's okay, because you guys are not sacrificing, saving for the future to do it, and you're not running up debt. So that's why people ask us, hey, what's the rule of thumb? When it comes to weddings, there's not one, because different people value them differently.
That's true.
People say, hey, what's the rule of thumb on vacations? There's not a rule of thumb on that. So long as you're not violating the other rules, saving for the future, not going into debt. You guys have already knocked that out of the park. But just to be clear, 45 on the low end, what's the hard stop number?
60.
Okay. I was nervous they're going to be like 45 on the low end, 250 on the high end.
No. I think it makes us feel better, to your point, right, that like we're cash flowing it, so we really know, like, as soon as we won't, but if we started violating what we have going on, like, that doesn't feel right, and that doesn't feel like a day we will enjoy. So the fact that we have this freedom and we're doing it in this way, and we're being conscious about, okay, I wanted something, big fun and, really, magical. But it's, it's in Knoxville, Tennessee, which is so beautiful. I mean, the people there are so amazing, so nice. The venue that we have is new. So we're just really excited. So yeah, if y'all want to come to the wedding.
Yes, we got the invite. Oh, that's awesome.
Yeah. And we're really like filling it with the big things that are important first.
Yes.
And then we see where that lands us.
I love that.
And then there are things that we don't care as much about. Other people do, right? Other people care about flowers, but like
we don't care.
But the centerpiece just might not be that important.
Right.
It just might not be that important to you guys. And I think it's awesome that you're going into it eyes wide open on that.
I do want to answer Bo's question really quick. You said how much have we put towards it, like with deposits and stuff. I think right at this very moment it's about like 7.
Okay, great.
So somewhere between in the high 30s to low 50s is probably the outstanding
Which have
part.
left.
So what I would encourage you guys, because you also have some compensation things coming with the RSUs and so forth, you all put together kind of an outline of the timeline of those when things are going to come due. Actually put it to paper and then overlay that with upcoming income sources, and you'll just see how that intersects. And so y'all are in a good place with planning and budgeting, because I don't want all the bills to come due and then the result is you squeeze that emergency fund down to nothing, and then we start the marriage with a limited safety net.
And I think now that we have, one thing about the deposits is now we know for a handful of the things, these are the payments we have coming up.
Yep.
And so like with the future stock, it's like, let me just take all of the money that I'm going to be paying for sure and set that aside.
Right.
That's great. That's great. That's beautiful cash flow management. For some reason, it sounds like it seems easier to you to set it aside for the wedding than to set it aside for other discretionary spending. Yeah. That's a muscle. It's just like anything else. You will learn to get more comfortable with that the more you do it. It's not supposed to feel natural day one, and that's okay. But I got better at it through time.
Now it's a great fun thing for me. Every time they do something, I'm like, whew. It's fun to poke him a little bit.
All right, are you guys ready for your homework that we want you to take away from this? First thing I put, this is just a logistics block and tackling. I want you to go figure out your backdoor Roth IRA setup. Have I been doing that correctly? If not, what do I need to do to correct that I've done in the past? And then should I consider rolling my IRA rollover into my 401k so that I have 0 IRA balances so that I can start doing backdoor Roths every year? That's going to be awesome. Number 2, I put finish your wedding budget. So I've talked a lot about budgeting. You guys ought to, same way you're going to do your normal budget, just figure out, okay, here's what we're going to spend money on. Here's when the timing of those deposits or those payments are going to be due. And here's the cash flow we have coming. So you go and have it all figured out ahead of time. Step number 3, I wrote, what are our goals? And this doesn't have to be like, you don't have to go into this with like this is going to be some friction. Make it a fun thing. Make it a date night. Make it a weekend. Make it an event that you guys get to do together where you just write down, hey, here are the things that are important to us. Hey, Lucas writes down, hey, here are the 5 things important to me, and here are the 5 things that are important to Chelsea. And holy cow, 3 of them are the same, but 2 of them weren't. And how do we, and you figure out how as a couple you're going to move in that direction and attack those goals. And then once you've defined what the goals are, then you get to build a budget, not a tracking system, but a budget. And here's how we're going to allocate towards the goals that we have. And we're going to agree with each other. These are the parameters we're going to live inside. Parameters for saving as well as parameters for spending. And we're both going to agree on the front end that this is the way we want our financial life to look as we're starting on this journey together.
And I want these goals. I would love for you guys to make them measurable and also put a timeline on them. Because I think otherwise, if you're just talking and you're dreaming, if you just talk about awesome things that y'all want to do as a couple, no, actually put down, this is what we want to do, when we want to do, and what we think is going to be required. So that way it has some teeth to it. And you can actually kind of work on the mindset in addition to the analytics of how we're going to get there. Because if you're just dreaming, that stuff's fun, romantic, but we got to put teeth to it so it's not only romantic now, but it's romantic as you're actually executing it as well.
You guys are awesome.
I'm super excited. I was when I walked in the room, I was excited to talk to you guys because I loved the story. I loved just seeing the journey for getting out of debt, also the mindset stuff. Y'all have the world by the tail. You really do. It's just a matter of executing and just living your best life, your great, big, beautiful tomorrow.
Well, thank y'all so much for hanging out with us. If you would like to be a guest on Making a Millionaire, you can go to moneyguy.com/apply, or If you want to check out any of our resources, you can go to moneyguide.com/resources.
Guys, we covered it so much. Money is only a tool. We want to make sure you're getting the most out of this life you have. I'm your host, Brian Preston, Mr. Bo Hansen. Money Guy team, out.
Making a Millionaire is hosted by Brian Preston and Bo Hansen. Brian and Bo are partners at Abound Wealth Management. Abound Wealth Management is a registered investment advisory firm regulated by the Securities and Exchange Commission in accordance and compliance with the securities laws and regulations. Abound Wealth Management does not render or offer to render personalized investment or tax advice through Making a Millionaire. The information provided is for informational purposes only, may not be suitable for all investors, and does not constitute financial, tax, investment, or legal advice. All investments involve a degree of risk, including the risk of loss. The guests featured on Making a Millionaire are not clients of Abound Wealth Management at the time of recording. Their participation should not be considered a testimonial or endorsement of Abound Wealth Management.